Joining us now from Singapore is Hugh Young. Hugh's MD at Aberdeen Asset Management Asia. He helps to manage around about $70 billion in Asian equities. Hugh, thank you very much indeed for joining us. Well, I suppose you'd like to forget the week we just had, wouldn't you?
Yes, well, it's been an entertaining week, but over the last few decades we've had quite a few of those, so it's something we're used to, and we just keep our heads down, concentrate on fundamentals, and often try and go against whatever sentiment is doing, if we're allowed to, that is. So saying, of course, certain of our funds have been hit by redemption, so however cheap we think things are, sadly we are forced sellers to an extent, but the redemptions have been limited so far, thankfully.
So, I mean, how do you really plot the course for next week now here, Hugh?
Well, it could be the same again, of course. As far as Asia is concerned, one feels fairly helpless because the problems are stemming from other parts of the world, and Asia in isolation looks a very comfortable investment. The companies are strong, earnings are still coming through, albeit at a slower rate this year than last year, but of course financial markets, as we all know, are very much interconnected, and sentiment in one part of the world and reality in one part of the world can affect other parts of the world as it is now. So we're all ready for more of the same, and just trying to ignore the noise and concentrate on the fundamentals, which I think still remain very favourable for Asia as a whole, and Asian equities in particular. But it's not going to be an easy year or two for earnings per share growth, for example. We weren't expecting that at the beginning of the year, but that's nothing new for us.
Hugh, I mean, you mentioned earnings. Earnings have also been strong in the US. We've had a remarkable earnings season there.
Well, the interesting thing, I think, the corporate world, as people have said, the corporate world is in extremely good health. Corporate balance sheets are strong, and of course one shouldn't dismiss American or indeed European equities just because their economies are a mess, because many of them are getting a large chunk of their earnings from emerging markets, from Asia. So that's one of the big fallacies that maybe we all can be guilty of at times. Just because an economy is weak, or vice versa, an economy is strong, doesn't mean to say one should avoid the companies or necessarily jump into them in the case of a strong economy, say, like China.
Right, let's have a look at your top 5 sectors. I mean, you're most heavily laden, I think, in financial services, aren't you? Something like 40% of your portfolio.
Yes, and about half that is banks, so we have big chunky holdings in solid banks in Singapore, OCBC, UOB, some of the broader banks, the Standard Chartered of this world, and more recently earlier this year we initiated HSBC, which we hadn't held in our Asian portfolios for some 15 years or so. So we have 20% in banks, which typically in this part of the world are not the dangerous institutions they've become elsewhere. Their balance sheets are strong, their businesses are simple, traditional banking businesses, but in many ways they're a link into general growth and health of the consumer here.
Yeah, and consumer goods, I was surprised that this only have a 6% weighting when it comes to that.
Yes, it's in our large cap portfolios and in the large cap space in Asia, there are not that many big consumer companies. There are in the small cap. So if you look at our small cap portfolios, you'll see a litter of Thai companies, Malaysian companies, Hong Kong companies, but they're all relatively smaller companies. So for consumer exposure, we have gone the secondary route, if you like, through banks, through property companies. We do have one or two regional retailers. You have the dairy farms, for example, or the Unilever Indonesias on that side of the consumer market, but there aren't many of those available.
Hugh, thanks so much. Have a great weekend. Hugh Young there from Aberdeen Asset Management.